Things over to Dawn.
Okay, thanks very much, Kyle. And we've got Angela Calla, who is an accredited mortgage professional, also the host of The Mortgage Show on 1410 AM. How are you?
I'm great, Dawn.
I know you from my days of realty television.
Yeah, it's great to be back.
So lots of people in the process of renewing their mortgages.
That's right.
This is such a time for people because we're looking at basically a buyer's market, and we're looking at interest rates still very good, right?
Very good. And a mortgage renewal is just as important as when you initially got a mortgage. And the most important thing to consider is that the institutions are in business to make money. And they are going to send you a letter when it's time to renew your mortgage. And that letter is going to be at a rate that is 1% or 1.5% higher than what you could obtain should you do some research on what you can get. Now, just to kind of give you an idea of how much of a difference that can make, Dawn, is on a $300,000 mortgage, that's a payment difference of $252 a month, and over 5 years, you can have $15,000 paid in additional interest if you do not take the time to shop for your mortgage renewal.
So that's definitely one of the biggest mistakes, but we've got several other mistakes that people make every single time when it comes to renewing their mortgages. So the first one is when it comes to signing the documents themselves.
That's right. What people are unaware of is when your mortgage is up for renewal, there are institutions that will actually cover the costs of bringing your mortgage over to them. They will cover the appraisal. They will cover the legal fees. And oftentimes, consumers aren't particularly aware with exactly what a mortgage renewal is and what a refinance is. And they both incur different types of work that's to be done with the consumer. So the first thing is not to sign the documents that are initially sent to you. You would want to believe that the institution that has had your business for the last 5 years is going to be offering you the best, but you do have options, and taking the time to review that can save you easily $15,000.
And of course, you also want to make sure you renew into the right mortgage. So should we assume that we're always going into the same type of mortgage that we just previously had?
Absolutely not, Dawn. There's as many types of mortgages as there are ice cream flavors, but this one has a big impact on your pocketbook. With the type of mortgages that are available, you need to know exactly what your plans are for the next 5 years. You need to know what type of prepayment is important to you. You need to know if you can bring this mortgage with you to another property, because selecting the wrong mortgage might have additional fees and costs down the road that you might not be aware of that can add again to the interest that you're paying to the institution, or if you are going to be making a move, can really cut into the equity which you expected to have from your proceeds.
Well, if you're someone that's bought because you're using it as an investment as opposed to someone who's purchased because you plan on living in it till the day you die, it's a completely different scenario because you have penalties and everything. So if you don't sign up for the right one, it could cost thousands, right?
Thousands.
Okay. When your mortgage is up for renewal, that's another problem. Lots of people don't even quite realize that it's coming up.
No. Everybody who's got a mortgage should go home right now, pull out their mortgage documents, and write on their calendar 120 days before their renewal date. Because if you don't know when your mortgage is up for renewal, you're not going to be in a position to be able to negotiate the best offer for yourself. And what the institutions will automatically do if you haven't made proper arrangements is they'll roll you into a 6-month open term, which is generally even higher than what the discounted rate is at the time, because of course it's open and it provides the flexibility for you to go into anything. So it's really important to know exactly when that date is, and you cannot count on the bank to make certain that they send you the note at the right time, because it's very common for things like that to be displaced.
Right, and at the end of the day, it's going to be me that suffers and not the bank if I've, right.
Exactly,
Yeah.
And we can begin negotiating at a very early stage.
Okay, and one of the best ways
days
to negotiate too is by knowing your credit score, because that impacts what kind of rate you get as well.
Knowing your credit score is one of the most important factors, and we can talk about this significantly on the radio show, and still people are learning about it. And each time as an individual that you go to an institution, it actually takes points off of your credit score, which affects the rate that you can be offered. But using an accredited mortgage professional, you can shop all 90 of the Canadian institutions with only one credit check, and also you can be positioned, so if there's something that's inaccurate on your credit bureau, it can be fixed in advance to position you to get that best rate.
That's interesting. I think a lot of people don't realize that every single time you get your credit score checked, you could have a great credit rating, and all the checks bring it down.
Exactly. People think that if they shop around to multiple institutions that they can get the best rate, but at that point they've affected their rate to the point where they may not get the best mortgage renewal. So consulting an accredited mortgage professional is crucial.
Okay, now we just want to bring up something. Last month there was an article in the news indicating that the Bank of Montreal had actually refunded, or they're in the process of refunding, $7.1 million to about 28,000 customers who had overpaid mortgage penalties, saying it made a mistake.
right? Well, you know, anybody can make a mistake, and this is a great example of that. The good news is our Canadian banking system is extremely strong. We have regulatory bodies that are consistently auditing it, so at least this mistake was caught. It would be scary to think if we lived in the United States, if this kind of thing would be caught. But our Canadian banking systems are globally sought after for our regulatory systems, and it's good that these people are getting a refund.
That's great. Now, to recap, we have a graphic just recapping again the 4 biggest mistakes that people make. First, when they're signing the renewal documents and getting them to your lender, of course, you want to make sure you get into the right mortgage, not the wrong one. Not knowing your mortgage is up for renewal, that's key. You said 120 days out, make sure you mark it on your calendar. And then, of course, make sure you know your credit score and don't check it too often. Now, coming up in the next segment with you in about 15 minutes or so, we're going to talk about how people can take full advantage of the home renovation credits available. So that's coming up a little bit later. The website there on the screen. You can reach Angela at angelacalla.ca. We're going to go to break right now. Coming up a little bit later, we're going to check in with Greg Harper, and he is at the Burrard Street SkyTrain station.